Good morning, everybody. Welcome to today's live stream. We've got quite the uptrend on Bitcoin. Let's load up this recording and get right to it. So, we've had a solid push here. Trend definition is holding on our lower time frames, which is excellent. We're still believing in the macro fractal of gold. Actually, I'm pretty sure this was the lowest Bitcoin is ever going to be again for the rest of its history. If I'm wrong, cool, I'll stop out. But I'm on a 5x long, and I'm not selling until 48,000. So, wish me luck. I would very much like to see that 300% gain. Or in my case, 1,500% gain. I'm going for that 10x, my friends. Anyway, with that in mind, let's talk about the lower time frames. 4 hour, we did have our compression condition, which has now completed. And by judging at the 3-wave PM, we've entered this nice little compressionary period. And we have upward slope on every single period. There is comprehensive net expansion to the upside. A very bullish sign. I would stay long if I were you. Okay? I'm long. I want to stay long. It's a very simple chart. I am a bull. And I'm going to stay bullish. So, with that in mind, why don't we go ahead and take a look at the 3-wave PM. Compression across all periods. What's particularly nice is our 600 period, which was our longest or expanded period, has successfully compressed below the 0.7 value. And what that means is trend can resume, and lo and behold, we're getting resumption of trend. Like, let's load up that 605 period, just so I can show you guys what it looks like. Okay, 605. Beautiful. Beautiful. So this band is no longer valid. We can successfully travel outside with it with absolutely no qualms. I would not be surprised if we saw the start of parabolic price action at this location. Of course, if we do cross the mean reversion pivot on our lower time frames, that would result in a short compressionary period that would last around a day or two. And let's define where that pivot is, right? On yesterday's live stream, 24 hours ago, we identified that if we were touching right there at 10,350, we would be taking a long position exactly on the pivot for trend. And oh goodness, it filled. It filled so perfectly. And now we're just getting that trend continuation. It's good. I like betting on trend. And now our mean reversion pivot's even lower, so we can actually technically retrace down to 10,500 right now in a single candle, and trend would still be defined. That's fine. As long as we're above that pivot, we can reasonably continue to bet on trend. So, definitely consider, staying long on that front. And just give me 1 second. Beautiful. Oh, goodness. 10,900. We're going to breach 11,000 today, aren't we? That is very exciting. It keeps on going up. Well, let me tell you, I am ready for these gains. Let's see what 15 minute is showing us. Trend definition is pretty good. We actually had a brief activation of the condition here, but it looks like the compressionary range did manage to hold that price action quite well. So, trend is defined. And even looking down here, look at how good this trend definition is. All these opportunities for longs. Here, 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 here. You would have stopped out of this one. And we got really close to this pivot down here, but let's take a look at the 3-wave PM to see if it's still active. No, that's an older condition based on this value. So let's actually load up those mean reversion conditions manually, just so we can get a solid look at what's coming next. Okay? We want to take a look at the 120 period. Also, if you're watching this live stream on YouTube, please comment any altcoins you'd like me to look at today. I'd be more than happy to do any analysis on anything you'd like Also, if you're watching this on TradingView, you can just comment in the TradingView idea on what you would like me to look at tomorrow. I'd be more than happy to analyze any pair you like. So, first up, we want to look at that 120 period. Okay? Beautiful. And that's this condition here. So, we had sustained trend, bounced on that pivot really cleanly. As soon as we actually had a significant candle close inside, we retraced exactly to the relative mean before it returned below the 0.7 value on. Let's actually take a look at the data window so we can get this exact. We want to see that 125 period down here turn green. So right on this candle, trend resumption was possible, and lo and behold, within a couple hours, trend did resume. So with that in mind, we actually had our next period of overexpansion, which was the 75 period, which we will now manually load up as well. Ah, beautiful. 75. And let's take a look at what this looks like. Ah, goodness. It's just so clean. So we have a significant trend outside the band with a trend defining pivot that holds very well. And as soon as we go inside the band, we revert exactly to the relative mean. And then as soon as the 75 value on the 3 to 8 p.m., watch it on the data window. As soon as it turns green, right there, this candle, trend resumption is possible. And lo and behold, we're getting trend resumption. So, higher highs still possible. Okay, trend is defined. You want to trade the trend. Here on the 1 hour chart, Quad CCI appears to be holding incredibly effectively. If you'd like to scalp into this long position, you can do so with relative efficacy by using the Quad CCI indicator I made. It's free on TradingView. Just Google Quad CCI, you'll find it just fine, where every single period is weighted on the same side. And whenever the 14 period dips down and rolls up, boom, bang, bop. Those are your long entries. So, if you have significant weighting on your CCI periods, Quad CCI is going to save your life. Alright, like here, everything's below the 0 value. So when the 14 period pops up and rolls down, boop, there's your short entry. Alright, in trending markets, this is your friend. We are in a trending market now. Well, how do I know this? Super simple. Super simple. We're in a macro level trend on the daily. So you can take the macro level CCI rolls and you can take the micro level CCI rolls. Same thing works in the previous bull run. Right, every time there's a 14 period CCI roll, you want to scoop up those longs and try to continue the bullish pressure. Ah, how lovely. Let's turn off logarithmic just so you guys can better understand the scale of this absolutely ridiculous bullish chart. Ah, that's very satisfying. If this is the bottom, guys, I'm going to lose it. It's very appealing. Let's go ahead and take a look at Link, shall we? Link and BCH. You know, I actually had a friend who bought into BCH even though he doesn't trade crypto a few days ago, and he's pretty happy about it. I think he's up like, what, 5%? Jesus, it's going to be so volatile. If we ever return to previous highs, man, that's going to be insane. Really. Okay. You know, Quad CCI is super muddy here. Daily has no weighting. 1 hour chart does have a longest overexpanded period, and it is in a state of compression. I don't think anything's going to happen with it today. I'm going to be honest, it looks pretty uneventful. I would not make any significant bets on this chart. Okay, let's go ahead and take a look at Link, shall we? Hey, volatility popped to the upside. Let's see if we can get any kind of trend definition on this bad boy. Major problem is Quad CCI is sloped to the downside, and I mean, take the short on the swing highs. That should treat you well. I don't know where you can short link though, so not really worth getting into that. And there is comprehensive net expansion to the downside, right? Every period rising in tandem with negatively weighted CCI, but no, look at this. Now you have an unweighted CCI. That's not good. Makes it hard to read. So we got to go to a shorter time frame and just define a trend pivot. That's our best bet for attempting anything here. Get your coin comments in, my folks, please. We want to look at that 90 period. Alright, gonna be good. Nice. Yeah, so that's an active mean reversion condition. You can at least expect retracement down to 22111. That's quite the drop, actually. Holy hell. 4%. Yeah. Not necessarily that this is going to be a significant bounce pivot, just that it's a target. Okay, it can go lower. It can actually go down to 205 at this time. So you got to be a little bit careful. Ankit Singh asks, do you think the strategy or some similar one is used by insiders, and do they not want to open to the masses to keep them confused on how the market works? Oh boy, this is a rant. I'll put it like this. I partially agree with you in the fact that the quote-unquote golden standard of technical analysis that is largely handed out to retail investors is given to them for the sole purpose of making them predictable. All right? If you have masses of traders all using the exact same information, making the exact same trades with the stop losses in the exact same locations, then you get predictable liquidity. And if you have predictable liquidity, then you can better fill your bags when you are attempting to push the market, right? So, do I think it's specifically my way of doing things that institutional investors use? Maybe on macro time frames, the probability distributions, yes, but I don't think it's particularly my method. I do believe they're using volatility theory as defined in Mark Whistler's books. He was an institutional investor and he programmed black box indicators, and he did use the metrics of the 1.25 standard deviations and 3.2 standard deviation. So I am inclined to believe that we are using the same building blocks, but I think our implementations are wildly different. So yeah, I am pretty confident that this information is being used. And then your spoon-fed, quote-unquote, easy ways to trade, like breakout patterns and Fibonacci retracements, to keep you predictable and comfortable in the dogma of your own inability to innovate. And I know that's harsh, but it's true, guys. I don't know how many times I've had full conversations with people about their strategy, just me asking, why does it work? Just give me the reason. Is it, and they always say one of four things. It's a proven standard, it's nature's law, it's worked in the past, or it'll work again, or the last one. I don't remember. It's made me money so far, essentially. And those are all appeal authority fallacies. And I really want to stress the importance of understanding the fundamental paradigms that drive your strategy. It's super important. Right? If you're lost in the woods and I ask you how a compass works and you say, oh, well, everybody else uses compasses, I'm going to call you an idiot. Because if you don't know about magnetism, then who knows? Maybe you'll accidentally hit it with a hammer. Maybe you're actually in the southern hemisphere. Maybe you're trying to go true north, but you don't know that magnetic north is a little bit off. So the thing is, guys, if you don't know how your tool works, you won't know what conditions prevent its efficacy. And it just so happens that a lot of the tools spoon-fed to retail traders don't have those kinds of answers. There is no fundamental paradigm that realistically drives it. It's just everybody else uses it, and it must be good because there's no way in hell everybody has no idea what they're doing. I just want to get that message across to as many people as possible, so I will go through that rant as many times as I need until people actually tune into it. Know how your tools work. Like Fibonacci, for example. Like, Fibonacci works for a reason. And it's not because it's nature's law. Fibonacci works because the percentile deviation for any major move of the first standard deviation is extremely similar to the Fibonacci value. That's it. You're using a static tool to roughly define a dynamic value in a dynamic market. So why not just use the dynamic tool that is readily available to do the exact same thing, but better? Like, it is beyond me. And it always boils down to, oh, well, it's good enough for me. I've made money so far. I'm like, yeah, sure. In your statistically insignificant, small sample side of trades, it does not validate the widespread failure elsewhere. You are not the exception to the rule because you aren't on a long enough timeline at this moment. So, that's my rant for today. It has been a pleasure. That's it. That's all I wanted to say. Thumbing through these charts, everything's red today, again. You know? That's fine. Just gonna bag hold XRP for a little bit longer. I mean, we're this far in the downtrend. It'll reverse, like, eventually. And I bought in, like, over here. Oh, this is a 1 hour chart, eh? Yeah. So, I mean, we'll see good retracement eventually. Maybe to the 618 value, haha. And then another thing I always see people do is they draw their Fibonacci retracement to current location. So, like, this is the kicker. So they draw their retracement to where price currently is. And the major flaw with that is, okay, well, you can do that on every single candle close in the downtrend. Like, we could draw my Fibonacci retracement here while we're back here in price action, right? Because that is technically correct. They're drawing it from the swing high to the swing low. Except you make a new swing low. So you, oh, that's it. I'll just drag my Fibonacci retracement down. Oh, there it is. Look at how well these levels line up, guys. And then, oh, there's the downtrend. We gotta lower it again, and then do it again and again and again. It's just asinine. Woo! Also, I guess I'm long on Ethereum. We can talk about that. At the USD. I mean, I'm long on the USD chart. It's pretty much, it's kind of funny because it's holding its USD value a lot better than Bitcoin is. And that's just because, well, the BTC pair is in a slightly less drastic downtrend than Bitcoin is in an uptrend. So, just biding my time. All right, friends. Thank you for tuning in to today's live stream. It has been a pleasure. It looks like I got one more comment. I'll check the daily on link, and then I'll be on my way for the afternoon. Okay? Yeah, you're actually getting a macro level mean reversion here to the 180 period, so I believe Link has further to retrace. Oh god, yeah, 1 second. Yeah, the daily makes it even more bearish. Like, we only just now activated the mean inversion condition, and the implied target is 1,500. Or 15,000, excuse me. So definitely be careful on that front, my friends. There's a lot of risk at this current moment, so be careful. Bide your time. I'll talk to you all tomorrow. Have a beautiful day.